Good afternoon. Welcome into a Tuesday, January 5th edition of Market Talk. I'm your host, Jesse Allen. Great to have you here. Happy New Year. MarketTalkAg.com. That's where you could find us on the web, MarketTalkAg.com. Also, same thing, Facebook, Twitter, Instagram. It is all at Market Talk Ag. And many of our great radio station affiliates across the country, from the Dakotas down to Texas, including our friends at KMA in Shenandoah, Iowa. Also, KWMT in Fort Dodge, Iowa. Got the stations in Bethany and Cameron, Missouri, part of the Alpha Media Farm Network as well. A lot of great radio partners joining us for Market Talk as well. Well, Tuesday brought a really crazy yet fun day throughout our market trade. Here to talk about it, Bill Biedermann with agmarket.net is our guest today. Bill, great to have you on again, and I just want to get your initial reaction to Tuesday's trade. What a day this was, Bill.
Oh, it was pretty impressive. I mean, yesterday going home, there were a lot of people dragging their heads, and then today we turned around and we're just massively higher. It's people are taking profit on these rallies, and they're getting opportunities to buy them back on 15 to 25 cent breaks, sometimes within minutes. Mm-hmm. So, a lot of volatility typically means it's good for us in agriculture. And I don't think that's over with, Jesse. I think the money flow is just really starting. I saw a piece come out from a really well-respected economist who's been around for probably as long as I have. Mm-hmm. And he was finally just saying, oh my gosh, soybean stocks could be down to 100 million or less. It'd be like one of the only times in history. I'm thinking, where's this guy been? I mean, we've been talking about this since October of last year, even earlier than that. But I mean, what my point is that there's older money just starting to turn the corner and go, oh, wow, look.
Yeah, it's impressive to say the least. Looking at today's market numbers, we finished a little off the highs of the session at the close, but not too far off. I mean, we're talking $13.50 beans on the board. We're talking $4.90 corn, almost $5 corn. Wheat's been impressive as well, getting off some of the support from everything we've been seeing. I want to ask you, though, we got that WASDE report coming up next week. Is this a little bit of maybe positioning ahead of that report? Are we setting ourselves up for maybe a negative day once that report hits? It's probably hard to say, but man, it just seems like there's no end in sight with this report on the horizon.
Okay, so a couple things. First of all, on corn, you're going to take the carryover stocks to use most likely down to about 10%. I mean, it could be below that, but we figured USDA probably won't go any lower than 10%. So our carryover number estimate is at 1.497, right around 1,500. Last month it was 1,700 or 1.7 billion bushels. Now, there's only been a couple of times in history where you've gone to or below a 10% stocks to use. I mean, you're talking about a 50-day supply or a 36-day supply. So this is a very tight situation. It's a lot tighter if you use the numbers that we really think are out there. But, USDA's got a history of saying what they want to say. So I'll just leave it at that. And so that's our guess. But point being is, if you've only got 3 other years to look at in history, and look at the kind of moves we had during those times, we're not there yet. I mean, we're just not. And in beans, it's even more dramatic. We went from a 14% stocks to use ratio down to about a 4% stocks to use ratio on this last report, just from August to November. And we've got 175 million bushel carryover. We think that's going to go down to 145. Actually, if we use the real demand numbers that we think we're being, because we're shipping and selling 80% more than a year ago, and USDA is forecasting 31%. So if we were to really make the revisions we expect, we wouldn't have a carryover. So we think in order to make any demand revisions, which they have to make, they're actually going to have to raise yield a smidge to keep that carryover where it's not panic mode. And that's how we're coming up with 145. But that takes your stocks use ratio down to 3.2%. I can't find another year like that. Mm-hmm. The last 2 times we had a 4.5%, we went to $16. I think it was in 2005. And then we went to $18. So those are the 2 years that compare with stocks to use. History tells us that there's a major difference between this year and those years, and that is you've got money coming out of governments around the world being disseminated into the hands of the consumer like never done. I mean, it's never happened like this before. So we don't know what that means as far as inflation. We know it means inflation. We don't know what it means on price impact. We know it's bearish the dollar, and we're seeing that, and the dollar should continue to go down. But if you put an inflation factor like 2.4+% on top of those kind of years, the rally is amazing. I mean, the potential is phenomenal. But to say all that, okay, I could say we're going to $5 corn, $15 beans, but that doesn't mean I need to gamble that it'll get there from a farming perspective. My farm is a business, right? If I can lock in $500,000 profit and keep my upside open by using options, man, I'm doing that. We just put out a long video yesterday about some ideas in doing that.
Well, I've talked to a couple producers here in the last few days, and I love that you ended on the point about, not gambling with where we're at with these prices, because there's a lot of room to take some profit here if you're a producer. And I've talked to some producers who are still hanging on to some soybeans. There's a lot of producers who have corn in the bins still, and they're basically, I wonder after the trade that we saw on Tuesday, if they're not going to start to maybe take some more of this profit just with the price levels that we're seeing. What are you hearing from some of the producers you work with?
Well, most of our producers sold beans early and kept all their corn, but we replaced all those bushels with options or futures, so we're still in the game. But I'm gonna say it like this: whether it's on the board or whether it's in the bin, doesn't matter. If the market goes up a penny, you're making. If it goes down a penny, you're losing. But we're talking 50-cent swings today, so that's a lot of money on your bottom line. So what we as a company have been doing this week has been taking profit on those kind of risk positions. So we're selling either the cash beans or we're selling some futures, and we're replacing it with an option. I was doing options today for between 12 and 16 cents. And I'm still in the market for another $1.80 on the upside. And I don't have the risk of downside unless it goes 80 cents lower than where we're trading, and then it kicks into a long position. So I just eliminated 80 complete cents of the market. I still got $1.80 I can gain on, and I've got 15 cents on the table. And that's what I'm gambling instead of gambling a 50-cent move every day. I can sleep a lot better with that.
You definitely can sleep a lot better, Bill. And that's a great way to put that, and great insight. And I think just overall, whether we're talking corn, beans, wheat, I mean, they all have their intricacies, but just the way that these markets have been moving the last couple of days, it's, again, just really exciting, I think, for a lot of producers, especially if they got a good marketing plan and a good marketing team with them. It's an exciting time and a great time to grab some profit depending on your marketing plan and your operation.
Yeah, that's right. And, don't be afraid to ask for help. Like, there's a few different consulting firms out there. We're one of them. But, we work with a lot of different size operations, and nobody's the same. We've got different formulas we use on our app that helps us keep track of break evens and things like that. And I'll tell you what, when you plug that in and you start looking at it, and then we have what if scenarios on there where you can plug in a strategy you want to do, it'll tell you how to work. It's a whole different approach, because now you're looking at, okay, no matter what happens, I cannot lose money on my farm. If I get hit by a train, my wife's still going to have a profit at the end of the year. And yet, my position is built so that if the market keeps going up, instead of making $500,000, I can make $1 million net back to me. Of course, before taxes, right? But, bottom line is, you're right. This is the most exciting markets we've had, in four or 5 years. We just took out last year's high last week in corn. So get this. This has never happened in my lifetime. I've been trading for 40 years. This last year, we took out the previous year's low in corn. And last week, going into the end of the year, we took last year's high out. So we have an outside yearly reversal to the upside. I don't know what that means. It's amazing, but it's, usually outside key reversal days mean there's going to be follow through.
It's very amazing. Very amazing. I think that's the best way we can describe where this grain market is trading right now. Bill, let's flip over to livestock. We could talk about that a little bit. Cattle on Monday had a pretty rough down day to start the first trading day of 21, but then we turn around and pretty much got that all back on Tuesday. Looking at this cattle market, was Monday just maybe a hiccup in the trade? What are some things that you guys are seeing right now?
I think there's still a pretty bearish faction out there based on COVID and based on the possibilities of some slowdowns in processing. But in the reality of the cash market, we are firming it up quite a bit. I think we were up $1 to $2 in the cash. So right now you have a market that all these bears come into the market. We go down to the 110, 112 area. We hold, turn around, we rally back up to 115, 116, and then the COVID bears come out and it stops it. So we're really stuck in a sideways market right now. Long term, I think you're going to be looking at weights coming back down to more normal levels. You're going to be looking at post-COVID era once everybody gets vaccinated. Honestly, I think the demand for this stuff's going to be massive. And I know in my neighborhood where there's a few teenage kids around, demand for beef has been through the roof because everybody's staying at home cooking steaks, So, I mean, we lost the restaurant business for a while, but we've retrained ourselves to eat really well at home, right? And it's been cheaper. So I think that demand is going to be a learned behavior that sticks around. On top of that, you'll have all the city people going back out into these restaurants. I think it's going to be explosive.
Yeah, I'm sharing that sentiment with you. And, we look at the cash trade. I know we're seeing some bids out there around 114, still looking for some northern bids yet this week, and probably going to be midweek or later till we really get some feedlot activity. But, starting to see that cash trade creep up a little bit with this board. I think that's definitely a good sign. And, from everything I've heard from folks like you, cattle, everyone kind of shares the same sentiment. It seems that this market post-COVID ready to maybe explode a little bit higher. Maybe not the explosion like we've seen in soybeans, but definitely some moves higher.
Yeah, and especially in cattle, this doesn't have to happen tomorrow. This could take some time, but the long-term trend is really good for all the ag markets right now.
Yeah. Let's talk hogs a little bit as well. We saw good strength in the hog market Monday. Tuesday was a fairly mixed day. We'll put it at that, still mostly higher. Looking at this hog trade, I know a lot of folks are, looking at $70 some, $80 some when you go out to the summer months on hogs. If we think about it, those are pretty good price levels as well and pretty comparable to where we were a year ago.
Yeah, they really are. And, I think one of the wild cards is going to be the China situation. Some people have expected massive exports of pork to China, and I don't know if all the exports are actually showing up. I think there's probably some containers going over there that we don't even know about. But bottom line is, if they get to the production levels that we're hearing internally, that they could be at 104% of what they were pre-avian flu or Asian flu. I think the export potential to them backs off. So I think it balances out our supply and demand of pork. I think you can be friendly for another 6 months going into summer a little bit. But I think I'm like you, you push towards $80, you might want to consider getting some hedges on.
Definitely some good things to consider. Bill, I think overall, just looking at this entire marketplace again here on Tuesday, just another impressive day. Any final thoughts or anything you want to reiterate to producers who are listening in?
Well, we got the USDA report coming up, and obviously USDA has, for years been, I don't want to say manipulating numbers, but they seem to put numbers where they kind of want the market to be. And I think what's happened is we've called their bluff. I mean, the reality is all of a sudden they've in 3 months made a record revision to what's out there. And I think they're having to square up with what reality is. That's just, annihilating anybody who didn't act on what they knew in their stomach was going on. As an end user, buying out ahead, you should have been. So I think we need to finish reconciling that. I think there's a massive amount of big money out there from New York or whatever that's going to come in based on the dollar, based on fiscal policy and stimulus around the world. All of this to say that when we do top this market out, it may not be for a year. It all depends on weather, right? I mean, here's what I think. If you go into February in the USDA out research meeting and then March acreage, and if we find out there's going to be a gazillion acres, which could happen because quite often USDA will just find 4 million acres of ghost acres or whatever, right? So if those ghost acres show up, we could kill this thing right there. And the only thing that would make it go up beyond that would be a weather problem in the United States. So I think as a producer, you have to be thinking, okay, that's my first black swan, is the February Outlook Conference and acreage. The second black swan could be weather. If we have really good weather this coming year, it will be down for the next 2 years trying to eat up all this inventory. But if we have bad weather, and I just read a report today that says that, I'll probably read one tomorrow that says good weather, but point being, whatever we think, weather will accentuate the move way beyond our imagination if the weather is serious. So my point comes back to manage your risk, locking in a floor as we go up, leaving the upside open. But if we get to extreme price levels, you got to sell it and just be happy and content. And so what if it keeps going up? Sell the next year.
A lot of great insight there, Bill, and definitely great thoughts to share with producers. And I know you mentioned earlier about your app with agmarket.net and some of the great things you guys do to help producers. I'm sure if they're looking for some help and want to talk to you guys, they can find out all that info on your website, right?
Absolutely. Agmarket.net.
Simple as that, agmarket.net. Bill, I appreciate the time as always, my friend. Thank you for joining us today here on Market Talk, and we'll look forward to talking again soon.
Okay, thank you.
Bill Biedermann with agmarket.net, our guest today here on Market Talk for Tuesday, January 5th, 2021. Find us online, markettalkag.com. I'm your host, Jesse Allen. Have a great afternoon.